That's right. And, what does that mean? I mean, do humans just entertain themselves by trading attention? Probably. I mean, we love gambling. Humans have done that all the time. We also love nature on the flip side of the coin, getting out into all of that. And you and I have talked for a long time about the rise of social communities and how you can economically participate in that via blockchain technology. So there's a lot of changes to what society will look like, but it's going to be pretty hard to adapt to. I mean, it's hard enough trading meme coins now, but when the whole world is set up like that, it's really, really difficult.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Raoul Pal, CEO of Real Vision, posits that we are on the brink of a transformative era, driven by swift progress in critical technologies including artificial intelligence, blockchain, robotics, biotechnology, and renewable energy. Pal anticipates that this integration of technologies will transform industries and economies in a manner not previously seen. He asserts that these technologies are poised to enhance growth and induce disruption, potentially reshaping our perception of value, fostering new economic frameworks, and paving the way for alternative currencies as decentralized finance and blockchain increasingly integrate into the financial landscape. Pal emphasizes the significant potential of advanced AI, especially artificial general intelligence, AGI, to profoundly influence financial markets. He believes that a highly advanced AI, equipped with comprehensive market data, has the potential to surpass human traders, fundamentally altering market dynamics and leading to a concentration of wealth. The evolution of AI, surpassing human understanding, may lead to an impact that becomes progressively challenging for individuals to forecast or manage, thereby introducing additional complexity and unpredictability into global financial markets. To effectively maneuver through this swiftly evolving environment, Pal underscores the importance of maintaining financial resilience. He recommends that individuals focus on investing in assets that are likely to maintain or increase their value during periods of disruption, especially cryptocurrencies and technology stocks, which may be more resilient to technological shifts compared to conventional assets. Furthermore, Pal emphasizes the necessity of implementing a versatile lifestyle and investment approach tailored to the unpredictable landscape of the exponential age. Pal asserts that the time frame to strategically position for this significant change is limited, approximately 6 years, before technological innovations reshape the economy in ways that could challenge conventional investment and business frameworks. With the increasing integration of AI and AGI across various sectors, it is anticipated that conventional approaches to trading, investing, and economic frameworks will encounter significant challenges, fundamentally transforming market dynamics and competitive landscapes. In a recent interview with Delphi Digital, Pal emphasized the importance of adopting proactive strategies for individuals and investors in light of upcoming changes. He highlighted that adaptability and resilience will be critical for success in the future landscape. The communication highlights that in the exponential age, technological advancements will reshape the definition of success, underscoring the importance for individuals to strategically align themselves to capitalize on the emerging opportunities. And lots of things Raoul Pal discusses, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
We don't know. I mean, we're already seeing the nascent signs of AI agents being able to be economically incentivized, right? This whole thing right now, the Terminal Truths, it's not real in that respect because it didn't launch its own token and stuff like that. But you can see it. I think people are starting to see the big picture. Now, if you think about agents, what is an agent? If you think of Fiverr, you can hire anybody to do anything. You're building a website, you're building a business, you hire a lawyer, you hire this, you hire that. They're all agents for you. But AI can do all the agent stuff, but it will charge money. So this is where the blockchain rails comes in, of moving the money around so AI agents can pay for the compute and stuff like that. But we're also seeing on the energy side of the equation, I think we're going to go to a distributed grid. So people say, well, it's impossible to create a huge grid for New York City on solar. Yeah, but you don't need to do that. What you do is you end up with Microsoft building 3 Mile Island to run its data centers. You get localized AI. We're seeing the battery technology from Tesla can run a house easily, any size house. So you have localized power. You have a whole different type of grid. And AI organizes a grid as well, putting the power in and out. It's very complicated to have a decentralized grid. AI will be able to run that for efficiencies as well. Where does the money come to? We don't know. Is it going to go to some mega corporations, X and Meta and OpenAI? Probably. But there's going to be a battle like there is in crypto or in money between open source, decentralized versus centralized. That battle is going to be gigantic. The battle over AI is going to be gigantic. But I'm not sure the profits will accrue to individuals. Now, people talk about UBI. Fine, there might be some UBI. Yes, we will tax the robots and the AI. We have to. If not, the economic system doesn't work. But I think we will figure out our own ways to make a living within that, as we talked about. And, that's community-based actions, I think.
The cryptocurrency market is experiencing a decline for the third consecutive day, driven by increasing uncertainty surrounding the upcoming U.S. presidential election on November 5th. Market participants are monitoring changes in election sentiment, as former President Trump's chances of winning have declined from 67% on October 30th to 61% on November 1. In contrast, Vice President Kamala Harris, representing the Democratic ticket, has experienced an increase in her odds, rising to 39% from 33%, based on data from predicted markets. The current political uncertainty is influencing market dynamics, as evidenced by the 34% decline in Trump's associated media entity, Trump Media and Technology Group, TMTG, over the last 72 hours. This follows a substantial 352% increase through October, indicating that investors are re-evaluating their expectations regarding a favorable outcome. The overall equity market has reflected this volatility, as evidenced by substantial declines in both the Nasdaq and the S&P 500 indices. On October 30th, the Nasdaq experienced a decline of 2.7%, while the S&P 500 decreased by 1.7%, marking a downturn comparable to its most significant single-day loss since early September. Market insights from the Kobe letter indicate that the S&P 500 experienced a significant decline, with around $800 billion in market capitalization being wiped out on October 30th. Several variables are influencing these sell-offs, in addition to concerns surrounding the election. The current market environment is characterized by geopolitical tensions in the Middle East, expectations surrounding forthcoming technology earnings, and speculation about the Federal Reserve's possible interest rate cut on November 7th. The interplay of these factors is leading to an increased risk-off sentiment, adversely impacting both traditional assets and cryptocurrencies simultaneously. The crypto market is experiencing a notable increase in liquidations, with long positions being systematically unwound in response to a shift towards bearish sentiment. In the last 24 hours, liquidations have exceeded $286 million, predominantly driven by $253 million in long positions. This trend indicates increased volatility and a decline in confidence regarding short-term profitability. The recent wave of liquidations underscores the speculative dynamics inherent in the derivatives market within the cryptocurrency sector. The recent clearance of over $2.7 million in leverage positions within the last 12 hours indicates that traders are encountering significant downside risks, which is intensifying selling pressure throughout the market. In the near term, the cryptocurrency and equity markets are expected to face increased volatility as market participants assess the implications of election results, technology earnings reports, geopolitical tensions, and the stance of the Federal Reserve. In the absence of enhanced clarity on these matters, risk assets such as cryptocurrencies are likely to experience continued volatility as investors recalibrate their positions and strategies in response. Let's back to the Raoul Pal interview.
So the monetary debasement has generally been to manage the debt because GDP is not fast enough to manage the debt growth. But GDP is going to come faster. Now, they need to tax the robots and the AI for it to go back to the economy to finance this stuff. But debt to GDP will collapse. We saw this in the 1950s and 60s. We saw a similar, productivity revolution that happened then based around technology, and the debts from World War II essentially got debased away. So we've seen this before. But I don't know what the world looks like when it's this deflationary. We've created a currency like Bitcoin to try and avoid the deflationary elements. But if everything is deflationary, I don't know what that world looks like in the end. What is money in a system of abundance? That's another question we don't know. If everything is basically almost free, ChatGPT right now is $20 a month. It's fucking ludicrous. It's having a mentor on anything with an IQ of 120 on every subject known to humanity. And that's where we are today. And this is going to be the worst it's ever going to be. $20 a month. That's so deflationary. It's stupid.
And with the rise of open source, right, you can make the argument that a lot of the GPTs of a year from now, 2 years from now, will cost less and less. That curve is also dropping.
They're going to be like water. It's going to be ubiquitous and everywhere on everything. So what is money when there's no scarcity? This is a question most people don't think through. And we don't know the answer, but what is scarcity in that world? Yes, there's some things that are purposefully scarce. One of the reasons I've collected a lot of NFTs is there is scarcity there. There is scarcity in experiences, human experiences. They become more expensive. But all of the things that we think of as scarce, lawyers, accountants, research writers, all of this stuff goes to zero. Zero. Money doesn't have much of a purpose when almost most of the things that we do for economic day-to-day activity don't have value at all.
MicroStrategy, under the leadership of Michael Saylor, has unveiled a strategic initiative to secure $42 billion over the forthcoming 3 years, with the objective of enhancing its Bitcoin holdings. The initiative, referred to as the 2121st Plan, aims to allocate funds equally between $21 billion in equity and $21 billion in fixed income securities. This approach underscores MicroStrategy's strategic emphasis on enhancing Bitcoin holdings as a fundamental treasury asset. The announcement was made on October 30th, indicating that MicroStrategy anticipates that an investment of $42 billion could secure around 578,586 BTC, which represents approximately 2.7% of Bitcoin's total circulating supply at prevailing market valuations. MicroStrategy's president and CEO Phong Le indicated that this capital infusion aligns with the firm's objective to enhance returns from its Bitcoin holdings, which are currently yielding a notable 17.8% year-to-date. The company aims to achieve annual Bitcoin yield rates ranging from 6% to 10% during the 2025-2027 period. As indicated by Liebund, the yield targets are consistent with MicroStrategy's overarching strategy of utilizing Bitcoin as a reserve asset, while effectively managing yield through its treasury operations. The announcement has elicited positive reactions from both the cryptocurrency community and traditional financial sectors. Market analysts, such as the prominent cryptocurrency commentator and Bitcoin mining expert StockEye, highlighted the significance of the $21 billion equity tranche, pointing out that it is comparable to the total market capitalization of the public crypto mining sector. In the interim, quantitative volatility researcher R. McInnes characterized MicroStrategy's growth as having the potential to achieve escape velocity. McInnes noted that the disparity in Bitcoin holdings between MicroStrategy and other public companies, as well as certain nations, is likely to expand considerably. This recent action underscores MicroStrategy's steadfast dedication to Bitcoin as a fundamental treasury asset, further enhancing its track record of prior acquisitions that have established its status as a prominent player in corporate cryptocurrency investments. MicroStrategy's strategy to significantly increase its Bitcoin holdings underscores its long-term perspective that Bitcoin serves as a strong safeguard against inflation and fluctuations in traditional markets. MicroStrategy is strategically investing in Bitcoin and implementing proactive yield strategies to maintain a competitive edge in market trends. By leveraging Bitcoin's asymmetric upside potential, the company aims to enhance shareholder value and position itself for future appreciation. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.